What's going on, everybody, and welcome back to the channel. If you don't remember, 6 months ago, roughly, maybe even longer, I made a video breaking down to you guys when it was the right time to invest and actually sharing to you guys my portfolio at the time. So if I was to start that exact day that I made that video, what would I be investing in? In today's video, I want to go over how did that portfolio do? Did we outperform the stock market? Did we do worse? Is it true that it's best to just invest in the S&P 500 and me investing in all these other tickers, these other stocks was a waste of time and a waste of money, right? So we're all gonna find out into this video about all of that, as well as some revisions and maybe some adjustments I would have made to this portfolio up to this date. So if you learn more about investing in the stock market, crypto, make sure you subscribe down below. Leave a comment. Let me know some of your guesses. Did I outperform? Did I do better? Am I smarter than all these hedge funds? I mean, at the end of the day, they do say that the hedge funds always lose compared to the S&P 500. So let me know what you guys think. We don't have a 1 year up to date because it's not been a year yet, so we'll compare the last quarter. Here it is. My portfolio in the last quarter is up 11.36%. Now that's pretty damn good, right? If you had your return was based on initial deposit of $100, currently would be up $11.36, right? Now if you had 100,000, you'd be up $11,000 in 3 months. Hey, that's not bad at all. And on top of all the dividends that you would have collected as well, because the M1 portfolio will not account those dividends, they will put that aside and then you can choose to reinvest it or just keep the money. So let's talk about first. Let's go. It's been a while. Let's go over what we quickly had invested in. I went with just about a quarter, a little over a quarter, 26% into VOO, Vanguard S&P 500 ETF. Why did I choose the VOO over the SPY? The VOO has a very, very tiny less expense ratio. When Microsoft and Apple equal shares both at 7%, which we're going over some of the charts later, and we're going to see how that was a genius move. Really going to Microsoft and Apple heavy, and how much they really outperformed the beginning of the quarter and really the whole, even last year, everything else. Doing with 5% heavy stake in Google, 4% in UNH, doing 3% in Tesla, which has been a pretty decent buy. Nvidia again, another one, 3%. Really strong, really holding up the market lately. IVW, which was a S&P 500 growth ETF, which has been doing pretty well. AMD, Walmart, Block might be one of the revisions that we talk about. Qualcomm, PG, for some of those dividends. JP Morgan, Energy ETF, Financial ETF, Snowflake, Costco, PLTR, Berkshire Hathaway. One of the biggest things that people got mad at me was only 2% Amazon, and we're gonna talk about that as well. Visa, the Triple Q, XLRE, Lululemon, Hood, Nike, Home Depot, XLV, J&G, Silver, Coin, and Coca-Cola. Go straight into I want to first off with touching on the top three here, Microsoft, Apple, and Google. Let's jump into the charts real quick. Here is the Apple chart, guys, and you can see this chart, Apple is up a ton from when we made the videos, roughly around $130, and only this up alone, we're up 26%. Why did I decide to go into Apple? As I explained to that previous video, the reason why I wanted to go so heavy in Apple because it's going to be one of your safest stock. Apple's going to hold up the market, right? If Apple thinks, everything else thinks with it. A big stake of portfolio should always be in Apple. Its company has the most amount of cash on the side. They could buy a small country. They could buy a small country if they wanted to, and they've just always been an innovation, right? And also looking at the level where it was at on a technical standpoint, this $132 to $130 support was always going to be really strong. Dipped very slightly, and then it's been rocketing up, and this looks like nothing stopping it towards potentially hitting the all-time highs, which was $180. Very similarly, if you go to Microsoft, look at Microsoft, guys. Very, very similarly, a stock that has not really sold off and has provided gains over gains, even through the sell-off. You can see it's really reversed, and it's really kind of only down very slightly from all-time highs. When I made that video, how much of a great time it was to buy some of the stocks, right? Even if we just started averaging into them. So Apple, Microsoft, very straightforward. Really like those. Let's go over Google for a second. Let's talk about UNH, because UNH would have been something that I would have taken profits on. If I was actively managing this portfolio, I would have started taking some of this off near the all-time high levels, which was right around this 530. Was when we bought this right in September. And then I would have taken some profit. So UNH, even here, you had a big scalp to 530. Even if we were in profit like 20-25%, like we're seeing Apple and seeing Microsoft, I'd probably be taking profits. If you're making a portfolio the way I do, I actively take profits on my long-term investments. Some of them, will keep them for longer. But UNH would probably one that I wouldn't not remove it from my portfolio, but I would start rotating out. Potentially bring this down to 2%, invest a little more into Nvidia, invest a little more into Google because I like what Google is doing right now. I like how Google, the chart is showing, and some of the progress that Google has made as a company. Google's, really turning around right now. We're only at 5%. I would probably raise this up to around 6 to 7, maybe even 8%, and kind of bring down that UNH a little bit below. That's one of the biggest switch I would change. For example, with Google, I would increase this by 6% and lower a little bit this UNH to right around 2%. That's one of the adjustments I would currently make. As well, what I would have done, because when we bought Tesla, if you go back to the Tesla, when we bought Tesla, it really went up to around 220 or some, roughly around there. I would probably taking some profit on Tesla currently. Since it did drop off a little bit, I would be fine holding where it's at with the percents that we have into Tesla of 3%. I feel really comfortable with that. Two that would probably lower just very so slightly would be just both AMD and Nvidia. As you can see from their charts, they've really, especially Nvidia, has been, look at this. Look, it's been pretty much on a rocket, and when we bought it roughly, right around these lows here, we're up a ton of profits, and we're sitting right above here on this strong resistance. So I'll probably be expecting a pullback to around the 180s where we'll feel comfortable to start buying again. So we'll take some profits and kind of lower this to 2%, and very similar to AMD to lower to 2%. I think only 2, not 1%, because I do still want to hold a lot into AMD and Nvidia because I do really like them. Now another one that I think that might be very interesting is JP Morgan. It quickly had a sell-off recently, but it has been quickly recovering it, with the whole drama with the banks. But JP Morgan still looks really strong, pays a nice dividends, and look at this, guys. Look from where we bought it, we're up very nicely on this. I don't know if it's something I would currently add money to. I think I'm comfortable with 2% of some exposure into financials. So we would just keep that there, and we'll keep our little 40% here in our back pocket. Now we'll quickly take a look at Costco, Walmart. Costco currently looks like it's breaking out right here and probably holding to all-time highs. Again, we're up very slightly on Costco and Walmart, and we really like the dividends that they're paying us. And look at Walmart kind of pushing that all-time high level after we picked it up after these big red candles here. Seems like it was a great buy, and I don't want to lower on this because I do think if you're breaking out this huge bull flag here on a monthly, more than likely you're probably going to look for a new all-time high past 160. Very happy with how Costco and Walmart are performing. With the energy sector, actually, I do think there's a lot of potential in the energy sector after a recent sell-off. Right, we found this resistance here. I do think that there's a high potential to potentially break into all-time highs, and we're probably going to see oil push for all-time highs as well. So we bought this down here, broke all-time highs, could taking some profits, could have added a little more in, kind of adjust that as we go. But I think adding 1 extra percent, I do feel really comfortable with that. Quickly, we'll talk about the XLF, which is the financial sector. Financial sector, as you can see, I had this head and shoulder pattern that I on the daily that did play out. Reason why I sold off, but JP Morgan holding very strong. This bank being under stress, but I do think that that's not gonna last for too long. So I do feel okay holding 2%. We always have to understand that the stock market moves in cycles, so we don't want to only invest in one type of asset. For example, tech. That's why you see our portfolio really more than doubled outperformed S&P 500. S&P 500 is only up 5% last quarter. We are up 11%. That because we was investing in the right companies in a diversified portfolio. And no matter where the money is going, we're catching some of that and we're profiting. Let me know if in the comments below. Should I start my own hedge fund? I mean, I kind of killed us. Next up, BRKB with old man Warren Buffett. BRKB looks really good. You're just now breaking on the monthly. I don't really see this not going towards the all-time high level, and we feel really confident investing in the Berkshire Hathaway. We're investing in BRKB because of the much cheaper stock price, just so you guys know. Next up, it was kind of a little bit into the lotto plays, PLTR. It is not something that really has done anything too crazy. It's been pretty much sitting flat, but I do think this stock does have potential hype for the future, and it brings in good revenue, and I did want to expose myself somewhat to beating down stocks that have high potential. So holding PLTRs may not be the most safest option, but being young, having that on our side, I think makes sense to invest in some companies that could look for high upside in the coming months, coming years. Same goes with Snowflake. As you guys know, I've always been a big fan of Snowflake. The company has always done really well. Even though it's sitting, near the lows, had a really nice pump here, and it gets bought up. You can see this big wicks on LA. Once it gets on a discount around this $130 to $120 level, guys, it gets bought up. And the company makes, you guys look at the revenue, makes money. beats expectation month after month after month after month. And guess who's investing in it? You bet in it, Warren Buffett. Procter Gamble, P&G, it's always gonna be stable. I think you gotta have 2% allocated at all times. Sitting towards all-time highs. We bought it down here, guys. Great buy. We're up a ton on it, and with the dividends, you can never go wrong with P&G. So we're gonna keep it 2%. We gotta find somewhere else to invest. XQ, actually something that we might have to cut, guys. Recently we had the Fed. Now, what is Fed now? It's gonna replace a lot of payments online. Square, I do think there's a lot of upside. For me, it's a pretty big head and shoulder here on the monthly. I might lower this to 1%. I don't think the upside there is as much with Fed now coming out. It might be a little bit rough, and honestly, I'll probably put one into Berkshire Hathaway, just because I really like the look of the stock. Amazon, really, my thoughts have not changed. Decent company, overvalued, overhyped, but the trajectory is there. As you can see, we're probably just about break even, if not down on this. But it's probably one of the biggest overhyped companies in the market. People think it's the best company in the world. Nowhere near that. That's why I always kept it really low on it. Next up, Coca-Cola. I'm not even going to talk about the chart. The chart looks good, but we have this for the dividend stock. Same with Johnson & Johnson. And then let's talk about Home Depot real quick. Kind of very similar to the other stuff. Beaten down, but pays good dividends, and long term this is going to be just fine. So we're just going to keep it what it is. Lulu and Nike. Lulu's a company that I always liked. As you guys can tell, the monthly is where we're heading. We're slightly down, potentially looking for that all-time high push. This company always does really well. Just go to any Lulu store. There's always a line at the door. Very similar with Nike. This company is always going to do well when you can buy them at a steep discount. We bought them, down here. They're always going to be a great buy, guys. And to pay nice dividends, it's a stable in our portfolio. Same thing with shares with silver. And I do wish we had some gold in here. Can't believe we do not have some gold in here. Guys, we're going to add a slice to this. We're going to look for GLD. GLD, the Gold Trust. We're going to add to our basket. Currently down 1%, which is pretty good for us to buy a little discount. Gold has been ripping, and I do think we still have some more upside in gold. So we added 1% into our gold to go along with our silver and the real estate. Let's talk about the real estate, guys. Is real estate gonna crash, right? Why do we have this real estate? It's the stock is, the fund is down, but I do think this is a beaten down, cheap fund to be invested in. So 1% into it to give us exposure to real estate. I have no issue with it. We're just gonna keep it there. Because when the wheels start turning and real estate, some of the stuff turns around in the markets, you're gonna see the real estate turn around as well, and outperform some of the other stuff, and then we'll sell some of the other stuff, and we'll ride with real estate. It's all about having the right portfolio. And lastly, let's talk about Robinhood. Right, that was another one of those lot plays. The Hood had a lot of potential, and really had a spike. It's kind of just sitting there, not doing much, but I do think he has some potential in the long term. I don't love it so much. As of lately, there's been some bad news about it. I don't love it too much, but I do think we should keep it in our portfolio. But now the question is, we got 2%. Do we add another slice? Do we invest in something else? Oh, quickly, let's talk about coin. I almost forgot about coin. Coin again. Another one that we bought with long future ahead. We're thinking about the future ahead. We only have 1% in it. And again, alongside with Hood, we're willing to take those risks. We keep our risk at 1%, really, really small in a couple companies, while majority of our portfolio is in safe growth, growing companies. Visa, just didn't think about it. Look at this huge bull flag breaking out. Looks really clean to keep going to all-time highs, and I love the look of it. So with this extra 2%, what I want to do is keep investing into a dividend portfolio. I think we're still in a risk-off market, so investing in things that are safe, like some of those charts, Johnson & Johnson's, Coca-Cola, Visa are gonna be our best bet. I don't think we're in a risk-on market yet, where we scale off of some of those less risky assets and go into heavier risk assets. So with the extra 2%, what I would like to do, add one more to Coca-Cola for the great dividends, and one more to Johnson & Johnson. All in all, I really, really liked how our pie performed, beating the stock market more than double. What hedge fund can do that, right? On pretty much something that I did not touch. If I was actively trading it and investing and having to look at it every day, I probably would have taken profits, added some more things like Tesla when it got really, really cheap, and even performed it even higher. This makes me think, man, maybe I should be in charge of those hedge funds. All those guys that went to Harvard, got PhDs there, MIT, what the heck are they doing? They're getting outperformed the S&P 500, and I'm more than doubling the S&P 500. So I hope you guys learned something. I hope you guys can go ahead, invest in some of these companies that showed you guys, so we can keep beating the S&P 500, we can keep getting paid dividends, and we can keep growing our wealth. If you want more of the stock market, if you want to trade with me every single day, guys, the link will be down below. And as always, peace.